What if I told you that the single best piece of investment advice from one of the richest people on the planet was also shockingly simple? Well, today, we're diving into that exact piece of wisdom from Warren Buffett himself. It's a secret he revealed in a really rare, private moment, and it might just change how you think about investing.
So picture this. It's 2010. The famous life coach, Tony Robbins, is backstage at NBC's Today Show. And who does he bump into? None other than the Oracle of Omaha himself, Warren Buffett. You can imagine, Robbins sees this as a golden opportunity, right? He wants to get some advice for the everyday investor, but what Buffett tells him, well, it was way more direct and personal than he could have ever imagined.
So, of course, Robbins, inspired by Buffett's just insane level of success, he asks him for an interview. He's thinking, I've got to get this wisdom out to the public. But Buffett's first response? Let's just say it wasn't what Robbins was hoping to hear. He got politely, but very firmly, shut down.
Yeah, Buffett's reason was pretty simple. He basically said, look, the secret's already out there. I've said everything there is to say on this. He honestly believed he had nothing new to add. Now, for most people, that would have been it. Conversation over.
But Tony Robbins, he's not most people. He's a master at reframing a situation. So he pivoted. It was a brilliant move. Instead of this big general question, he made it super personal. He asked Warren Buffett, okay, forget the public for a second. What's the specific advice you've given for your own family's money? Especially since Buffett had already promised most of his fortune to charity. That's the key.
And that was the magic question. It unlocked everything. According to Robbins, Buffett just breaks into this big smile, grabs his arm, and decides to share the absolute core of his philosophy. And what he said next, it was so simple, it's almost unbelievable.
So, this is it, the big secret. It's not some complex algorithm. It's not about some secret stock picks. It's just one idea, indexing. That's it. A strategy so simple you're probably thinking, no way. Can't be that easy.
Okay, so what in the world is indexing? Well, think about it like this. Instead of paying some Wall Street guru a ton of money to try and pick individual winning stocks, which is really, really hard to do, you just buy one single fund that owns a little piece of all the big companies in a market index, like the S&P 500. See the difference? You're not trying to outsmart the market, you're just buying the market.
And here's why Buffett loves this so much. There are really two huge reasons. First, you automatically own a slice of hundreds of the biggest, most successful companies out there. You're betting on the whole system. And second, and this part is absolutely crucial, you get to skip paying those ridiculously high fees that active fund managers charge. Those fees are like termites, just silently eating away at your money year after year. But Buffett didn't just stop with the general idea. Oh no, he gave Robbins the exact step-by-step blueprint that he put in his own will for his family's trustee. This is the real deal. And here it is, the portfolio. It's almost shockingly simple. 90% of the cash goes into a very, very low-cost S&P 500 index fund. The other 10%, that goes into short-term government bonds, for a little bit of stability. That's it. Simple as that. So to break it down, it's literally just two steps. There's no complexity here, no need to constantly check things or tinker with it. And Buffett's whole belief is that this incredibly simple plan will, over the long haul, do better than what most of those high-paid professionals can do for you.
Okay, I know what you're probably thinking. That sounds great in theory, but can a strategy this simple really beat the supposed geniuses on Wall Street with all their fancy research and complex computer models? And you know what? That is a totally fair question. And it's a question Buffett decided to answer with a massive, very public bet.
Yep, back in 2007, he really put his money where his mouth was. He threw down $1 million wager that a single, simple index fund could beat a hand-picked portfolio of super expensive, sophisticated hedge funds over the next 10 years. Now, the time frame here is really, really important. This wasn't some quick, short-term gamble. The bet ran for a full decade, all the way from the beginning of 2008 to the end of 2017. And think about what happened in that period, the giant financial crisis of '08. This was a true brutal stress test for his idea. So what happened? How did it all play out? Well, on one side, you had Buffett's single, kind of boring S&P 500 index fund, and on the other side,
protege partners picked 5 different funds of funds, which means they were invested in dozens of different hedge funds run by supposed experts. It was the ultimate showdown, simplicity versus complexity. And the winner? It wasn't even close. Buffett's simple index fund won by a landslide. It averaged over 7% a year, while the sophisticated hedge funds, they barely managed to get over 2%.
So, what's the big lesson here? What can we all take away from this? Because beyond just the numbers, there are some really powerful principles here that apply to pretty much anyone who's thinking about investing. Let's break them down.
Okay, so here are the big ideas. First up, simplicity is almost always better than complexity. We get drawn to these complicated strategies because they sound smart, right? But usually that complexity is just a way to hide high fees. Second, you have got to keep your costs low. Seriously, fees are a bigger threat to your money than a market crash because they show up every single year no matter what. And finally, it's about betting on the long-term success of great businesses as a whole and just saying no thanks to those high-fee managers who almost never earn their keep. You know, there's this great quote from his 2013 shareholder letter. This isn't just some theoretical advice he dishes out to other people. This is exactly how he's told the trustee for his own family's inheritance to invest their money. I mean, that's the ultimate vote of confidence in your own philosophy, right? So let's just end on this one final thought. We live in this financial world that is constantly trying to sell us on complexity, making us feel like it's a sign of being sophisticated. But what if Buffett's right? His advice really challenges all of us to ask a very simple question. Is all that complexity actually helping you? Or is it just the biggest enemy of your long-term returns? Something to think about.